Good morning, everyone. Welcome to our learning institution, the CIT, or the Southeast Asian Institute Technology Incorporated. We're still blessed that despite of COVID-19 pandemic, we can still have session like this with the purpose of continuing your education. And it's my great honor to be your instructor in Fundamentals of Accounting, or Accounting 111 and Accounting 113. A certified public accountant by profession, and teaching is not a new thing to me. I've been in the academy for more than a decade, so rest assured that you will learn something after our session.
Why do I need to study accounting? What might be the required knowledge to continue this course? The answer is just too simple. Nearly all of us, as people, in every walk of our life, whether we are paying some bill, paying the tuition fees, buying some laptop, buying some cell phone, paying a fare or pamasahe to a tricycle driver, all of the things deals with accounting. Isn't it quite exciting? I hope your answer is yes. Because that is one of my objectives in this course. I want that everybody will appreciate the accounting and that you as my students will not find hard to yourself to study our course. As to the required knowledge, I'm telling you that first and foremost, all you need to have is the analytical capacity. In simple words, it just needs that you have the capacity to analyze, or to comprehend a certain transaction. Now you're hearing a business term, the transaction. What is a transaction? I'm sure everybody of you understand transaction, but in accounting parlance, transaction is the exchange of values. Exchange of values. Mean to say, to have that exchange of values, we need two parties. The first party will receive something, and the second party will have something value being parted with. For example, with this platform of learnings, we need a gadget, maybe a cell phone, or a laptop, or a tablet. So you need to buy that one. To have that one or to acquire that one, you need to have some money. Okay, you go to a store, you have that money with you, you'll buy it. So to have that laptop, you have to pay money. So what is the value received in that transaction? So the value that you receive is if you are the one want to buy the laptop, so the value received is the laptop, you're right. And the value you parted with to have that laptop is your money. So that is a transaction. There is an exchange of values wherein there must be a value received, for example, your cell phone or the laptop, and the value parted with is your money. Now you are doing the first process of the accounting, which is the analyzing. But it's only an introduction. So now I hope you understand what transaction is. Now let us define what accounting is. There's a lot of definition in many textbooks, but one of my favorites is that accounting is the language of business. Yes, you're right. Language of business. When you heard about the word language, what comes in your mind? What medium we are using to communicate? For example, the English, the Filipino or Tagalog, the Bisaya, Ilonggo, whatsoever, even the Japanese language. So it's a tool, or it is a communication tool to our users. But how can be accounting the language of business? In what manner? The answer is simple. Through the financial reports that can communicate to various users. The users might be the internal one, and who is that internal users? The business owners, the employees in a decision-making level or the management group, like the board of directors, the supervisors. So they are the internal users. And we have the other users, the external one, and they are the government, the public or the people, the financing institutions like the banks or the cooperatives, the investors, customers, suppliers, and the employees. Don't be confused with these employees to the management group. We're talking about here the management group. There are those people that involve in decision making, in directing the path of the business enterprise in achieving their organizational goals. So that is the management group. While the employees, they're the rank and file workers that being supervised by those management group. And I do hope that it's still clear up to this point. Are you still with me? I hope you're still with me. How can those transactions be recorded so that it will be processed to be financial reports in the future? The first starting point is the so-called having these source documents. Source. The term self pertains to the origin of a transaction. Can you still remember what transaction is? I told a while ago that this is an exchange of values where there's value received and the value parted with. And in accounting, it must having the evidence. And we call that evidence of transactions the source documents. So for example, if you bought that laptop, you'll be having the so-called sales invoice or maybe the so-called official receipt. So that is the source documents. That source documents, after being analyzed as to the value received and the value parted with, it's being recorded in the so-called books of accounts. Books of accounts is another accounting term, and it's just a book, isang libro. Okay, which later I will show to you the different books of accounts. But in case you want to know it in advance, we have the two books of accounts. We have the so-called books of original entry. We call that one the journals. And the books of final entry, we call that one the ledgers. After we recorded it in the books of accounts, we can analyze, we can pause it, and it can be processed soon to be the so-called financial statements. And out of that financial statements, it will be communicated to the various users I mentioned a while ago, the internal users, the external users. Internal users, they might be interested to know whether their business is doing well. It might serve as the basis for decision making of those people in the management group. And for the external users, they might be interested to know how much should be the tax to be paid by that business enterprise. Or maybe for the employees, they might be interested to know as to the status of the business, whether it has still that capacity to pay their salaries, of course, or whether that company can give them some very good incentives or benefits as they rendered work to that company. Or for the investors, they might be interested whether that company has the potential to grow. Or the suppliers might be interested whether that company has the capacity to pay their bills or their accounts. So a lot of things that these financial statements can communicate to those various users. Now let me introduce to you the type or the basic financial reports or statements that the very core of our study. First, we have the so-called statement of financial position, or we term that as our balance sheet. Don't be afraid or don't hesitate about hearing about these financial statements. Maybe in your mind, ooh, it's hard to learn that financial statements. But the answer is no, definitely no. It's just a very simple one. Because what is a balance sheet? As a joke, it's just a sheet that is balanced. You're right. So a sheet that is balanced, it's just talking about an accounting equation. That there, in an equation, we know that in an equation, it is always equal. That later I will discuss it to you further or in details. Let me define or explain to you what is the statement of financial position or the so-called balance sheet. It pertains to the health of business enterprise. It measures and evaluates the enterprise liquidity, solvency, capital structure or the source of financing, the capacity for adaptation or the financial flexibility, liquidity, as if parang water, as if like a water, liquidity. It will just answer the question, are there available funds to finance the business operation? Ibig sabihin, meron ba siyang enough money to pay for the salaries, for the current obligations? So, the funds available to continue its operation. Solvency. Solvency. Can the business pay its long-term obligation to others? For example, if the company, before starting up the business, lacks a capital, so it resorted to borrowings to a financial institution. And for example, the term of its loan or its borrowings is 5 years. So thus the company has the capacity to pay its not maturing due after 1 year. So that is solvency. It talks about the available fund to pay its long-term obligation. I hope it's clear to you by this time. Can you still hold on? Can you still comprehend what I'm trying to say to you? And I hope the answer is yes. So let's continue with the next. The capital structure or the source of financing. So let me put it in a simplest way. For example, you wish to have a computer shop or internet cafe, and the required capitalization to start up your internet cafe is 100,000, and you only have 50,000 cold cash available. So the capital structure is that coming from your own money or coming from your own resources is your 50,000. So this one source of financing from your own pocket, and the remaining 50,000 to complete the 100,000 required capitalization, that is your source of financing, is your borrowings. So that is the capital structure. So it means to say, when you started up the business, you have 50,000 from your own pocket and 50,000 from your borrowings. So that's it. The last one is the capacity for adaptation, or we call that one the financial flexibility. Flexibility. It's just a simple one. It just need to answer this question. Is there excess cash available for opportunities in the future? That opportunities might be first, maybe for expansion of the business, okay, or maybe to address some uncertainty in the future, or maybe you have that excess cash for investment, maybe tying up with some successful companies. The capacity for adaptation. In short, you have that excess assets, excess cash. You have that savings to adapt, to address uncertainties, or to enter into investment in the future. Also, it answers the following questions. I mean, the balance sheet or the statement of financial position. It answers the following questions. First, how much the business owns. So let me cite it. For example, you as the business owner, how much you owns? Ibig sabihin, magkano ang pagmamay-ari mo? Pagmamay-ari. So, that pertains to your assets. You heard again another accounting terminology, the assets. Assets is not hard to understand. Say for example, in a beauty pageant, for example, a certain host asked the candidate, okay, candidate number one, what is your asset? Oh, what is your asset? So the candidate might answer that, my asset is my virtue as a woman. My asset is my beauty, inside and out. That is an asset. Okay? Asset. So in short, assets is just, in accounting parlance, it is anything that you possess, that you own, that you have, that you have the legal right to enjoy its benefit. For example, you have the building, you have the cash, you have the furniture and fixtures like the table, the chairs, you have the computers or the office equipments. That is some examples of assets. Anything that you own, that you have the legal right, you acquired it from the previous transactions, and you acquired that one with the expectation that you will having that economic benefit in the future. For example, you acquired that laptop because you're expecting that it can help you do the recording of your daily transactions. Okay, you acquired that building, so you have a place to do business with. That is an asset. So it answers the first question, how much the business owns. Next, how much the business owes. In simple word, utang, liability, or the payables. So that is also available in our statement of financial position, or we call it 20 balance sheet. And lastly, how much the business net worth. Mean to say that only pertains to the owner's equity. Let us relate that one to the capital structure. When I put an example, when you thought about starting up an internet cafe wherein you need 100,000 capitalization and you have that 50,000 cash available in hand. So that is your owner's equity, net worth. Ibig sabihin, when you started up buying that computers, you have 100,000 assets, you lack 50,000 money, so you have that 50,000 utang or the liabilities. So therefore, your owner's equity or the net worth is 50,000 pesos. So that is the informations available to the balance sheet or the statement of financial position. Let us continue. The second financial reports statements is the so-called income statement or the statement of comprehensive income. By the words itself, it records the income of a certain enterprise for a given period of time. It gauges or it measures its financial performance. So for example, after putting up this internet cafe, despite of COVID-19 pandemic, you have still a lot of clients. Okay? For example, you have that revenues of 100 pesos for the day, and your expenses for the day, for example, is 50 pesos. So the financial performance, you have a profit of how much? You get 100 pesos income. Ima-minus natin yung expenses natin, which is 50 pesos for the day. So you have, of course, ginansya or the profit of 50 pesos for that day. That's why for a given period of time. It answers the following questions. Does the business make profit? And for our previous example, yes. We have how much profit or income? We have 50 pesos income. Does the business incur loss? So if, for example, the income for the day is 100 and the expenses for the day is 110, of course, nalugi po tayo kasi kumita na po tayo ng 100 pesos at gumasto po tayo ng 110. So how much is the loss then? It's 10 pesos, you're right.